going to uncover few hidden things that most investors forget when they do cash flow calculation. First of all, interest rate is not just what they pay. Insurance, premium and excess. Most people consider insurance as a set and forget. Once they buy it, they don't review it. And I saw all of my clients were getting really good quote, and I was like, how come I'm still paying so high? If there is going to be any maintenance cost, any special levy coming up, you will be putting yourself as a risk. So when you sit down to consider which structure you're going to buy, also consider if I can afford this property. Don't just look at the interest rate and the rental income you're getting. Also factor cash flow calculation for investment property. It's not just about how much interest rate you are paying and what sort of rent you are getting. It's way more than that. And I'm going to uncover few hidden things that most investors forget when they do cash flow calculation. First of all, interest rate is not just what they pay. They also pay in the bank. In the bank, they also pay annual package fee if they have one. If they choose to have offset account, they may have to pay for the offset account fee as well, right? So when you factor cash flow, don't just focus on the interest rate. Also say how much valuation fee the bank is going to charge, or how much application fee if there is any annual fee for the offset or the package that you're getting. Number 2 is insurance, premium and excess. Most people consider insurance as a set and forget. Once they buy it, they don't review it. I was one of them. So recently, I was with one insurance provider for so many years, and I thought I'm getting a good deal. But when I saw all of my clients were getting really good quote, and I was like, how come I'm still paying so high? So I sat down one day, I reviewed my quote, and I found out I was overpaying. So I changed my insurance. So if you haven't reviewed your insurance, I suggest take your time, shop around. There are always plenty of deals happening. But insurance is one factor people do not consider when they do the cash flow calculation. Number 3 is strata levies. When you especially buying an apartment or townhouse within the strata, this is the one factor you should consider when you do the cash flow. Because if you don't know if the strata has a sinking fund, if you don't know if there is going to be any maintenance cost, any special levy coming up, you will be putting yourself as a risk. So before you buy, grab last 2 to 3 years annual general meeting reports. Talk to them and see if there is any special levy coming up or not, how much sinking fund they have, so you can plan your budget accordingly. Number 4 is land tax. We have to pay as an investor, but most people forget about this one until it's time to pay. Every state has a different rule, and also depending on the structure that you're buying, either individual name, joint name, company, trust, it can affect your land tax bill. So when you sit down to consider which structure you're going to buy, also consider what is the implication for the land tax, so you can factor that into your cash flow calculation. Because some states, they have a threshold limit. For example, New South Wales, it's almost more than $1 million threshold. So if you have a property under the individual name, investment property, and the value is 1 million or little more than $1 million, you don't have to pay land tax. But when it goes above that price, you have to pay land tax on it. But if you're buying under, for example, company name, there is no threshold on it, so you have to pay land tax on any limit that you own. So make sure you do the land tax calculation before you decide the structure, and before you do that, decide which state you want to buy as well. Number 5 is compliance and safety check. It's a very small portion, but a lot of states started introducing regular yearly safety check, which, for example, Victoria has introduced safety check for electrical and gas appliances for all the rental properties. New South Wales has a smoke alarm testing every year. So you also have to factor how much it's going to cost you on a regular basis. Number 6 is vacancy and annual turnover. If your property is in an area where people often come and go, for example, some really good suburbs with a very good school, people cannot afford the rent there, but they want to send their kids in their particular school. So what they do is they come, they take 6-month lease or 1-year lease, and after the lease, they will move out somewhere else. So if that is the case, you want to factor what is going to be rental vacancy, and every time the tenant changes, the agent will charge you letting fee. It's either 1 week or up to 2 weeks as well. So you have to factor that in your cash flow calculation. The next one is maintenance. Nobody knows how much going to how much it will cost you to maintain the property. Sometimes there may be some small issue, sometimes it's a big issue. Nobody knows. So what I usually do is I'll try to cover about 2 to 5K per year. That covers like small changes in the plumbing, electrical, anything at all, So when you do the cash flow calculation, you need to factor this as well. So basically, when you sit down and see if I can afford this property, don't just look at the interest rate and the rental income you are getting. Also factor, what if the interest only period finishes and you don't have a borrowing capacity to extend another interest only period? You end up paying P&I. So can you afford that? What if the property is vacant for 2 to 3 weeks? Can you afford that? Everything else, see if you can really afford it. And if you're in doubt, I usually try asking my clients saying, put extra buffer in your savings. Let's say $10,000 to $15,000. Put it in your offset account or somewhere that you don't see it, don't touch it, and forget about it. So every property you own, have at least 2 to 3 months rent in case if you don't get a rent or in case if there is a maintenance coming up. So $10,000 to $15,000 as a buffer for every single property. And this is how I help investor make an informed decision. See, this is Priyank Patel, buyer's agent, and I help people all over Australia make informed decision with a peace of mind using data and strategy. It's not just about the money, or it's not just about the cash flow, it's about the mindset as well. When you buy investment property, you want to feel at peace knowing that you can afford the property will give you good rent, and it will grow over the time as well. If you are in the market to buy investment property, reach out to us. We are more than happy to help you. Thank you so much for watching this video. See you next time.